Hello, this is Brian Shannon from Alpha Trends Blogspot. It's Thursday, June 28th, 2007, and the market's closed with the Federal Reserve not making any change to monetary policy as expected today. And the spiders were up 6 cents, the Qs down 3 cents. We had a mixed market here. Really not much happened. The one thing to look at here on this daily time frame of the spiders is that we have the market up, still trading and closed below that 50-day moving average. We've got the 10 below the 20. They're both heading lower. And we do have a series of lower highs and lower lows that we need to pay attention to. Now, I thought that this was a trap yesterday, and so far it's looking like that. But because of the overall neutrality that I have towards this market, I think that we still have to be very cautious and on alert for a potential breakdown. If the market breaks below the lows that we saw yesterday down near that 148 level, then we could be in for a lot further trouble, perhaps dropping down towards the 145.5 area, and maybe even this 200-day moving average might come into play. On the weekly time frame, again, we do have a lower low on the weekly, and it doesn't mean that there's a reversal coming, but it is pretty confusing time to be in the market. As my friend John said, it's a schizo market right now, and I think that's a perfect time to take some time off, and that's exactly what I'm going to be doing. I won't be updating. Probably I might put some comments on the blog, and for those of you that look at me just at YouTube, be sure to look at alphatrends.blogspot.com. But I'll be out all next week. So I'm not sure when the next video will be, but I might post some other things. I might post some charts once in a while if something looks interesting. But right now, I think the sidelines overall is best unless you're a short-term trader. Now, the market is back above its 5-day moving average. However, that 5-day moving average is still declining. I wouldn't be surprised to see it pull back further, even towards 150, maybe even 149.5. And then maybe some kind of bounce develops. So my forecasting right now is only good for a day or so, and as usual. But I won't be updating, so you're gonna have to leave it to yourself from there. So we had the break of the downtrend line. We've gotten a bounce. It held up fairly well. You got the typical, crazy type of activity after the Fed right in here, and basically there's not a whole lot. To look at in terms of, except for maybe this being set up as a potential inverted head and shoulders pattern, which in which case above this 151.5 would be the bullish scenario with maybe a stop below this area. That would give us a target that would be 3.5 points higher from there. So up near 155, which on the daily time frame would also lead to a new high, very similar to what I pointed out yesterday in the Qs. And the Qs today finished with a loss of 2 cents, but they are above the 10, 20, and 50-day moving averages. It was a successful test, first test of that 50-day moving average. That was only the first time it's been tested since it broke out past that here on April 3rd, and has held above that level since then. So again, there's relative strength in the Nasdaq, and I think that it's looking positive here. We've still got this area here. I think breaking past 47.90 or so, that could be what leads to the next move higher and higher highs. And obviously, well, that is the high. So moving past that level would take a lot of short sellers off guard. Still, the 5-day moving average starting to flatten out. I wouldn't be surprised to see it pull back a little bit before we saw that rally develop, if it does develop. So continue to just treat this market cautiously and look for short-term trades primarily. But the overall trend is higher. Looking now at the semiconductors. The semiconductors still kind of floating around this old high area. A lot of volatility up here recently too, but we do have a rising 10, 20, and 50-day moving average. On the 10-minute time frame, it's telling us pretty much sideways, choppy mess in here. But overall, we've got to definitely give the benefit of the doubt to the buyers, especially when you look at that weekly time frame, like we see in here. And finally, we've got the IWM, which was down 11 cents today. Looks like some support down, right around this area. Still, I wouldn't be surprised to see it pull back towards that 5-day moving average. If a bounce was to materialize from there, that would be very bullish. Enjoy your 4th of July, and I will talk to you when I get back. Thanks.